So after I uploaded that video talking about how I made $36,000 in almost 10 minutes, everybody was asking, how do I find A-plus setups in the morning? Now, in this video, what I'm going to do for you guys is give you a checklist on everything I do in the morning before I start trading. How I find my trades, what watch list am I going through, what am I journaling, everything in between so you guys can understand how I set up my days. So let's start off with the first step on the checklist. The first thing on the checklist is going through CNBC and going through my watch list. So let me show you guys how I do that. So first things first is I'll go through my watch list on CNBC where I look at all the stocks that I usually trade. So some of these stocks are stocks that I've rarely traded, but when they do have big green days or big red days, I love to touch them because of the type of volatility that I get. Now, the first thing that I do look at on my watch list out of all the stocks that I do trade normally is I'll see what's up the most and what's down the most on the list. So for example, here on extended hours, SMCI is down the most. So that'll be something that I write down, note down, understand that it is down the most. Now, I also look at what's up the most. For example, Disney. Now, this is Sunday where, this is Friday after hours, quote unquote. So nothing is really up much. So it's up 0.4%. But for example, the past week or two, Tesla's been up the most in the morning, or Nvidia. So I'll look at those things, note it down, and see what's down the most, like, SMCI. And then I'll go and look at where is SPY and QQQ. So SPY is pretty much flat here, down 36 cents, which is 0.06%. And then I'll also look at QQQ, which isn't on my watch list, and it'll be down 75 cents, which is only 0.14%. So understanding all those stocks being up the most or being down, the most, then I'll look at the market and see where we're at. Second thing after that is I want to look at the news here. Where are we? Why are stocks up the most? What stocks have the biggest news? And then some stocks that aren't on my watch list might have some news. So I'll go over here and then look at some news. It'll tell me, what are the top 5 most important things for the day. Amazon maybe opened up a new warehouse, whatever the case may be, so I can see where we're at in the market. Also, I'll see if we have FOMC news or anything I need to expect through the day, any data coming out, and that's what I use CNBC for. So that's really my first step. I'm going to note those things down, write those things down, or have it in my head. And then I'll go from here and move on to my computer where I'll show you where the next step lies. So from CNBC, I'll head over to my computer. Obviously, this is my setup here, but I'll head over to my Mac just so I can show you what goes on. With the stocks that are up the most and down the most, I'll go through them on the chart and see where can I actually, see the setups at. Just because it's up the most or down the most, it might be in no man's land where I can't really find a trade. For example, let's say I was looking at Tesla. I might see a trend on the 1 hour, right? And then I'll say, okay, where's the next psychological level? Where's the next key level? And then I'll note those things down. This is just preparation for me to journal, right? It's not me noting exactly where I'm going to enter at. I'm just trying to see different things that I wouldn't see just looking at how much it's up for the morning, right? For example, it's this, trend. Maybe I'll go to a bigger time frame, see what's going on there. Okay, looks like we're having an inverse H at all-time highs here. And obviously Tesla's been, squeezing as of late, right? And then I'll go to SMCI, for example, which is down the most on my watch list, and say, okay, oh, well, it's down the most, but there's not much going on the chart other than this breaking the 4-hour trend, because let's say my key level is 28 bucks. It's too far away for me to take a trade. Okay, I'll subtract SMCI from the watch list. So that's one thing I want to do here is start subtracting things from my watch list so I can narrow it down to the top 2-3 plays that I really want for the day. After I go through a few charts that I've already, transferred over from CNBC. Now I want to go through stocks that, I didn't actually write down. For example, Netflix, right? Let's say that was flat this morning. I want to still look at it and see, okay, well, is it consolidating? If it's consolidating, it's still a possible play on it. It just might not have divergence this morning, right? So for example, if, Netflix is consolidating this morning, not showing me that it's up or down, it's just flat with the market. I want to see if I can see anything. Now, is there a consolidation going on where I can find a flat top breakout, for example, here at 940, or I can find a flat bottom breakout at 908. All those things come into play, and then I'll go over to, let's say, Apple, right? That was pretty much flat. What can I find on Apple? Oh, it's flat this morning, but there's a consolidation. Looks like I could play this 250 break because, one, that's a consolidation flat top breakout, and it's also into a key level of 250. Now, that doesn't mean I'm going to take that trade. That just means, okay, this is a very big possibility that this can end up doing, a nice move either to the upside or to the downside using this consolidation. In this case with Apple, I would like to look at it to the upside because the downside is a consolidation break to the downside, but Apple's been very, very strong lately, so I'd rather trade this to the upside as long as I can find, more confirmations, whether it's on the tape, times in sales in level 2, or I can see some divergence as the day, passes on when the market's kind of flat or maybe dropping and Apple's holding up. One of the coolest things that my partner broker offers is it kind of automates your trading. And what do I mean by that? Let me show you. Well, pre-market, we all scan for things that we really like. For example, double tops, double bottoms, triple bottoms, head and shoulders, bullish flags. These are all simple things that we look at pre-market or during the day. And the best thing about Moomoo is you can filter this and see what stocks are having triple bottoms and double bottoms. And a lot of stocks here are stocks that I normally wouldn't look at, which is the best thing about it, because instead of me playing the same stocks every single day, I have Moomoo to provide new stocks. And obviously, the stocks that I do usually play, it'll show up on there as well. So that shows me the future of what trading could really hold for us and what advancements AI can really, help when it comes to brokers. All right, so now after I've done all those things, I went on the chart, went through the stocks that I like looking at, or went through the stocks that I've seen on CNBC, and then narrowed it down and then found a few other stocks that may be consolidating, not showing me any signs of strength or weakness, but it's showing me some consolidation. Now I'll narrow it down to say, okay, which stocks do I really like, okay? A lot of people have a misconception. Just because you have a A+ setup doesn't mean, one, it'll be a trade that you want to take today, because let me explain. If I have an A+ setup on coin, for example, and then like a B- trade on Tesla, I still may rather take Tesla because, one, tighter spreads, two, a stock that I'm normally really, really good at trading, three, a stock that shows me a lot more volatility and a lot more follow-up movement into key levels and psychological levels, rather than me playing coin, a stock that I normally don't trade, dependency on Bitcoin, and then a few other things like wide spreads that I really dislike. Option volume isn't as great as Tesla. All those things come into play when I'm picking my trade. So I might have a really, really good setup on coin, but I still may take Tesla ahead of coin just because of the simple fact that I'm more comfortable with it. So I'll narrow it down. I really don't want to have more than 3 things ready for the market in the morning, because when I do that, I tend to be all over the place and I'll miss the best trade of the day because I'm so focused on 5, 6 different stocks. I learned that a lot in college because during that time when, President T was president, there would be so many plays in the morning and I would just get lost trying to, get into Roku when I should have played Tesla because I'm more comfortable with that stock. And then Tesla ends up happening and Roku doesn't. All that stuff comes into play. So the next thing I'll do is I'll grab my journal and then I'll see, okay, these 3 stocks that I'm really, really willing to play, what am I going to do here? And how do I plan on taking this trade? So the first things first, right? What do I like about this stock? Do I like the 1-hour trend? Do I like key levels? Do I like the consolidation? Is it showing me divergence in the morning? That's the first thing I want to see. I want to name what do I like about the stock. Now, a lot of people always look for the positives. Another thing I really want to do is list some of the negatives that I see. Maybe, lately the stock hasn't had any follow through. I have to be more careful, or I have to treat it as a scalp rather than a full-on trade because I see a bigger move. But lately the follow-ups have not been clean. So I have to name all those things before I even start naming, my entries, my exits, and all the details that, we plan before a trade. So those are the first 2 things. Positives that I really like about the stock, and then the negatives. What did I see on the stock for me to want to even put this on my watch list? Trend, psychological levels, key levels, and then the negatives, the red flags that I see that may end up, holding me back from taking this trade. The second thing I would like to, write down is my entry. So I'll write down, okay, I'm looking at 142.50 on, let's say, NVIDIA. With 142.50, I would like to see a break and hold above with volume, which would lead me to 143.50 as the next key level on this stock. Or if it's a intraday level, I'm going to name that as well. I'm just giving you guys, ideas. It can be an intraday level, key level, psychological level, just depending on the type of stock, because some stocks react differently at these different levels. And for example, coin might have, a very bad week of follow throughs. And I've been finding, great plays on coin. Then I'll notice it just doesn't follow through. I'll be up 12, 13, 14, 15%. And then the trade ends up coming back to break even where I'll have to stop out. So I'll name those things and then name what I need to see to keep me in this trade. For example, like I was explaining, if the stock hasn't been having follow throughs, there's definitely red flags that pop up before, that trade comes back to break even. I want to narrow it down, identify those red flags. So if I do see those things, that'll be an exit for me rather than me holding to my targets. Also, for the positive side, what do I really, really want to see while I'm in that trade to make me hold from, like, let's say, 250 on Apple to 250, 250 on Apple? What do I want to see while I'm in that trade? Because it's not going to be a straight through shot. A lot of us pray for those big breakouts and you'll go from 250 to 250, 250 in an instant. But a lot of times those plays don't work out. So you have to sit there and kind of, ask yourself, is it worth holding to that next level? A lot of people think if you have a 1 to 2 risk to reward prior to getting into your trade, you have to treat it as a 1 to 2 risk to reward. Now, when I get into that trade, and let's say my setup was a 1 to 2 risk to reward, if I see red flags, or if I see green flags, or if I see more confirmations on holding this trade, that trade can end up being a 1 to 3, a 1 to 4, a 1 to 5, or it could just come right back to 1 to 1. A lot of things change while you're in the trade, and a lot of people have the misconception of, if I get into my trade with a 1 to 2 risk to reward, I have to stick to my plan, or I'll just come back to my stop loss and that's where I'll stop. No, you have, as a trader, you have to make decisions while you're in that trade. And those are decisions that you can make with the plan you created before market open, like the red flags that I need to see, the amount of confirmations I need to see to stay in that trade. All those things come into play when I'm taking that trade and when I'm in that trade as well. After I have my entries and after I write down what I need to see to stay in that trade or what I don't want to see to get out that trade, then I'll look at what my exit plan will be. Am I going to look to, scale out at that level? Am I going to look to take everything at that level? What am I looking to do? Let's say 252 on Apple, or 250, 250 is my exit or my next key level. Does Apple have a tendency to get to 250, 215, 250, 220, and then come back down and then go back up to 250, 250? If that's a tendency for Apple that I've seen, from previous breakouts, then I'm going to say, okay, if 250, 250 is my next key level, I'm going to make sure to exit this trade earlier than, the next key level break. So things like Tesla, things like, Nvidia, those stocks really do get to their targets. Sometimes they do miss by like 10 or 12 cents. And you'll sit there and be like, damn, should I hold? Should I, wait for this pullback to happen and then wait for this to go? Sometimes it's just not worth it because options have time decay. So if you allow this trade to get to, let's say, from 250 to 250, 250, right? And, it gets to 250, 250, it doesn't break, you're waiting for one more push, and then it ends up pulling back. You have to say, okay, do I sell or do I hold on to this and see if we end up breaking right back up to 250, 250? Those are all decisions you have to make based on prior history you've seen in that stock. So all those things are important before you get into those trades because you don't want to make too many decisions while you're in that trade. You're already dealing with, the emotional side of things with your money or your liquidity fluctuating up and down. And then you're also going to have to deal with also, SPY, QQQ, all those things that might be going up or down while you're in this trade. And now you have to make the decision, okay, is the market too weak here? The market too strong? Is my stock behind? Is my stock ahead? All those things while you're in the trade are already something that you have to be looking at. So why not have a plan so you can limit the amount of things you have to think about while you're in that trade? So that's something that I really do focus on. Where do I plan on exiting? Do I want to scale out before that target comes in? Do I want to wait for that break? Do I know if it gets to that level and doesn't break and pulls back, am I going to hold or am I going to take more off the table? All those things are things that I think about when I'm in that trade or before I'm even in that trade. After I do all those things, Then I'll head over to the Discord and write my trade ideas every single morning. I'll tell the chat, hey, these are 3 stocks that I'm looking at. I'm watching this, this, and that. Where do I plan on entering? Where do I plan on exiting? Do I look to scale out? Do I look to, possibly not take this trade because, something may happen in the market? If it's not showing divergency, will I still take that trade? All those things come into play, and I'll write that in the Discord so the Discord obviously knows what I do every single morning or what I plan on doing in the morning. And the last thing that I want to do is I want to focus on divergency, right? Am I seeing my stock ahead of the market or behind the market? So while I'm in that trade or even before the trade, I'll notice those things. So a lot of people just like to trade Apple and not look at anything. When I'm in Apple, when I'm in Tesla, I'm looking at QQQ and I'm looking at SPY. A lot of people want to look at one thing because QQQ is tech, but the S&P 500 also comes into play. If you get big red candles on the S&P 500 or there's a trend that the S&P 500 might run into, it might stop QQQ from breaking out as you may have thought it would prior to the market opening. So all of those things come into play when I'm looking at the stocks that I look at every single day, SPY and QQQ. Divergency, divergency, divergency. That's the most important thing when I'm looking at my stock. Yes, I can have a great setup, but without the market in my favor, it's going to be very, very hard to succeed in that. And that's the checklist on how I find A-plus setups every single morning. Remember, not every A-plus setup is a trade you should take, and not every A-plus setup is a stock that'll go in your favor. You can always hit your stop loss, and that's why we plan ahead. I hope you guys enjoyed this video. Comment down below what other videos you'd like to see on this channel.